Good afternoon, everyone. I know you guys had to wait. There was some issue with the link. It took me some time to join the link. So I just need to confirm one thing. You guys can hear me. Am I audible? I think if somebody can please drop us a text in the chat box. Perfect. That's great. Wonderful, wonderful, wonderful. Oh, so many messages. That's really great. The good thing is that we have really good participation today, and that's really overwhelming. And thank you so much for everyone for joining. Let me just quickly introduce myself and IFA to everyone who is joining today. My name is Saqib Iqbal. I'm the regional representative, regional director for IFA in UAE, Kuwait, and Oman. Today's session is to give you a brief about the corporate tax, and I clearly understand there are multiple people who have a lot of questions and all that. We did a very good series last year when we first received our public consultation document, and now we are in a like in a different position, different times where we have a lot of things being very clear, and we this is the reason we are starting it again, and now we have. A lot of information on hand so that we can do our series again. Just to give you brief about IFA, IFA is one of the largest accounting bodies around the world, one and which is part of IPA Group, Institute of Public Accountants. Both are IFAC member bodies, and lately they have been doing really great in our region. They've been arranging a lot of seminars and webinars and so many other things. So another interesting thing to for our IFA members that recently IFA has collaborated with Skyline University Sharjah, and a lot of good things like going to be there for our members and very interesting things. Now, a couple of other stuff which I need to share with you guys. We are going to have a physical seminar in Skyline University. Very soon, we are going to announce the final date, which is about it'll be about the corporate tax again, but in a detailed one. Today's webinar is again a very brief introduction about the corporate tax, but we will have a very detailed one very soon. Another important thing, tomorrow we are going to have our physical small networking event. If you really guys want to join that event, we have that on our IFA page, and you guys can call us or email us to join that event, which is going to be again about discussing the local rules and regulations about the taxation. I'll quickly share my screen, and then we'll just going to start. Great. So I think we're gonna have a small question answer session at the end of this webinar, and I'll be really happy to answer few of your questions. Not every single question will be answered. I know that it takes a lot of time to answer all of the questions, but I'll try my best to answer some general questions so that everyone can understand. And even after that, I'll share my contact details for anyone who wants to get any specific answer about his situation or a query and all that, so we'll be able to answer that as well. Wonderful. So when this first time corporate tax thing came into the picture, the whole scenario in UAE, everyone was talking that is it going to be implemented? So here we are, it's implemented now, and I'm pretty much sure that everyone has a lot of scenarios in their mind. Does this apply to their company? How much it will be having some impact on their company and all that kind of stuff. And believe me, after a year, everybody would be asking everyone that, have you filed the return? Have you paid the corporate tax liability? So it's already there, and we need to roll up our sleeves, and now we have to jump into this thing, and we have to understand it for our own organizations and for ourselves, and it's really important for everyone. I'm part of SA Consultants, which is the Dubai-based auditing firm. I'm a partner in that firm, and this is the reason I have and my team has done a lot of research for corporate tax so that we can answer questions for everyone. Right. So this is the first slide we have. This is just to give you a brief that how does it apply, to whom it applies. As you can see, there are two different sections. The first section is you need to understand it. That the first thing you need to understand is that a legal person incorporated in UAE. When I say that, that means a company or a legal person who is incorporated in UAE in any shape. I'm not distinguishing it. So you need to understand this. If it is registered in UAE, it might have to file the corporate tax. So this is number one. Number two is a legal company or a person that is not incorporated in the UAE, but is effectively managed and controlled in the UAE. Even though if your company is not registered in UAE, but still there might be some complications where you might have to pay or file the return of the corporate tax. If in that case, the company is being managed from the UAE. A natural person who is engaged in a business activity in the UAE, that also can have some direct impact from the corporate tax point of view. So if you say yes to all these three sections, so you have to jump straight away to the other side. And yes, if yes, then you have to actually understand, is that company is a UAE federal or the local emirate government related, if they have any department, if there is it's a public institution, or it's a wholly owned government entity, or if it is a business which is directly engaged in the extraction and the exploration of the UAE natural resources, or a charity organization, or a public or regulated private social security or retirement pension fund, or a regulated investment fund that has applied for an CT exemption. If one of these are directly related, then you have to actually say yes or no. If you say no, then this person will be subject to the corporate tax. If it is no, then this person will not be subject to the corporate tax. Why we have to actually distinguish? Because as you know that in UAE we have multiple types of authorities, and if I just narrow it down to just sort of a general authorities, so we have one which is a clear authority, which is the mainland of every single emirate. As we already know that there are seven different emirates. One of them is Dubai, Abu Dhabi, Sharjah, and everywhere we have a mainland authority. Then we have multiple free zone authorities, which are specifically limited to some sort of activities or business activities. For example, DIFC, we have Dubai International Financial Center, which is limited to the financial activities generally. Then we have other free zone authorities, and the same actually applies to other states where we have multiple free zone authorities. I'll definitely answer the free zone related questions. I know that a lot of people have those kind of questions also related to free zones. And if anyone has any question related to free zone, so we'll answer that separately. But I was actually trying to explain you that what could be the legal structures which are general legal structures which we have in UAE. One of them is, of course, sole proprietor or individual, the natural person. Then we have the limited to the liability company, which is LLC. Then we have public joint stock companies. Then we have other couple of other types of institutions or legal structures which exist in UAE. Yes, there are some reliefs which have been recently given to these kind of smaller entities. So we will answer those, or I'll explain you those as well separately. Let me just quickly check if you. Rizwan, yes, we do have a recorded session. I'll try to check if we have anything which we can share separately. I'm pretty much sure. I need to check with the IFA if because this is recorded and definitely it can be shared. Yes, these slides, we can actually share those slides as well. This I will share with the team there, and they will forward this to all those who actually being sort of registered for this webinar. All right, so let's jump to the next part, which is, so what is corporate tax? As everyone knows that it is corporate tax is applied to the corporate income or corporate net income of a company. It's a direct tax, definitely, or type of a direct tax, which is applied on your net income or the profit of your entity. Then, of course, corporate tax is sometimes also referred as corporate income tax or a business profit tax in different other jurisdictions like UK or any other jurisdiction where the corporate tax has been sort of applied already and they are paying these taxes. So when it was actually kind of introduced, it was introduced last year through a public consultation document, which was shared by Federal Tax Authority, and now it is already implemented. The cutoff date was 1st June 2023. So this means we are in a period where the corporate tax is already implemented, and you have to start aligning yourself with the given juridical laws and rules and regulations which have been set by the FTA through the decree law. Now, I've already mentioned the decree law. What is the decree law? So the federal decree law number 47 of 2022 on the taxation of corporations and business was issued on 3rd of October 2022, and it's already effective from the 1st June 2023. What are the rates? Generally, there are three rates, but I'll mention these two rates first, and then after that we can discuss the third one also. There are two types of rates. One is 0% and the other one is 9%. If the corporate tax is kind of directly applicable to your company, then the first 375,000 dirhams worth of net profits are going to be 0%, and anything over and above will be taxed at 9%. Now, it's very important to understand. So, for example, in a taxable period, if your net profits you disclosed around, let's say, 500,000, so the first 375,000 dirhams worth of net profits will be taxed at 0%, and the remaining 125,000 dirhams worth of net profits will be taxed at 9%, or anything over and above that. Yes, there is a third slab also, which is generally going to be applied on those companies which are large corporations or NMCs type of thing, where they have multiple companies around the world, and they consider they have a threshold of revenue and they have achieved that revenue. Then there is going to be a third slab for those kind of companies as well. As we are completely focused at the moment on the SME sector, so I'll talk about 0% and 9% in this webinar. All right. So what are the tax incentives at the moment? So the first one is, if exempt, for example, the direct exemptions have been given to those entities which are directly regulated by the government sector, or those are the government entities, or those are directly or wholly owned by the government sector. So there are multiple organizations in UAE which are directly owned by, but they are registered as a separate legal entity, but they are owned by directly the government sector or the local emirate or federal government. So in that case, they have the direct exemption from the corporate tax. The second one, which we have already mentioned above, that is the extractive businesses, where they actually directly extract the natural resources of UAE. If they are involved in that, so definitely they can get the exemption for the corporate tax. Then we have any other qualifying public benefit entities, like there are multiple charity organizations which work under the CDA authority, and they have direct exemption because they are not existing to earn the profits. They are not for profit organizations, so they have the direct exemption from the corporate tax. Now we have another one which is exempt if applied to and approved by the federal government. So if you think that, yes, your organization or a legal structure has to be exempt from corporate tax, and you apply for the exemption and you get the exemption from the Federal Tax Authority, in that case, yes, you can also claim the exemption. All right. So how the compliance and the reporting part, of course. How is a taxable person subject to the corporate tax? Now, you need to keep this in your mind. You need to bear this in your mind. There have been a lot of discussion lately on the free zone part. Does this apply to the free zone? Does this apply to the free zone or not? Or is there any exemption for the free zones? Yes, there are going to be the exemptions for the free zone companies, but not every single free zone company is going to be exempt from the corporate tax. So how it actually applies? If your company is LLC, if it is a legal structure of limited liability company, then yes, you have to register for corporate tax. Now, question arises that, do you really have to actually file the return? Yes, once you are registered, you have to file the return. But do you have to pay for the corporate tax liability? You could have you could get a small business relief, which is there for 3 years. And yes, if you fall under that, yes, you will get that. I have a separate slide for that, and I'll explain you what kind of reliefs could be there. So just to clarify one more time, if you are a limited liability company, yes, you have to register, you have to file the tax returns. But do you have to pay for the corporate tax liability if you are, or you are entitled to get the relief? That is the question, and we will answer you in the latest stage. Right. Now, there are two types of legal persons, which could be a resident or which could be non-resident. Yes, there could be a lot of companies having very complicated structures. They have companies here in residing in UAE. They might have some companies or sister concerns or related parties outside the UAE. The question arises: do you, whenever you are sort of planning about this kind of structure or this kind of a tax structure, so in that case, you have to see that your company within the UAE, which is subject to corporate tax in UAE, does that have the permanent, or can that be considered as a permanent establishment within the UAE? If that can be considered as a permanent establishment, so definitely you'll be subject to the taxes within the UAE. If it is not, then you have to go on the other options on the later stage, seeing that if that company is not a permanent establishment, then it might be a permanent establishment somewhere else. So that means it might be subject to taxes somewhere else. In this case, the Federal Tax Authority has took a very specific view about these kind of companies. So, for example, if you have a permanent establishment, so that for that we have a fixed place criteria. We have a specific criteria to see that if your company is kind of a permanent establishment within the UAE or not. So, for example, if you have like shops or showrooms or any other operational stuff within the UAE, you have the office, you have head office, or anything which suggests that you have a permanent establishment or permanent place or fixed place within the UAE. So you might have to consider your company as a permanent establishment in UAE. If not, then you have to see that if that is not the case, then there are a couple of other stuff. So, for example, there are many companies which actually exist only to display the products of different companies or their head offices or their other sister concerns. If that is the case, that means you are not doing that kind of a direct commercial activity. So you might not consider that company as a permanent establishment, or you just exist to store the products. So in that case, yes, you can get you're not a permanent establishment in that case. A lot of people have questions on the periods, that when you need to consider the applicability of the corporate tax. I whenever somebody asks me, so I just like clearly briefly explain him. You need to understand one thing. Whenever after 1st June 2023, your first financial period is starting, so you have to consider that as a taxable period. Now, a lot of people do not even know that what kind of financial period. So, for example, and I'm not talking about the accountants like you. Of course, you have the knowledge about these things, but there are people in the market, they are not familiar with these things. So, whenever you're explaining, so you need to explain them. They might have to go back to check their legal documents like MOA and all that, and they might have already opted for a specific financial period. In most of the cases, it is always 1st Jan to 31st December. But if there is anything which is deviating from that, so you might have to consider that. So, for example, if your financial period, and you opt for that same financial period as your taxable period, is starting from 1st Jan till 31st December. So, how does it apply? So, your first taxable period will be 1st January 2024 till 31st December 2024. And your first tax return period will be, because you will get 9 months at the later stage following the 9 months. So, for example, if your period is ending on 31st December 2024, so you will have 9 months till end of September 2025 to file your return and pay your corporate tax liability if there is any liability. Yes, if your period is within the June, for example, if your period is starting from 1st July, for example, then your period is already started. Congratulations, you're already in your taxable period. So you need to actually do a lot of things that means. So you might have to consider your taxable period. Yes, you can deviate from that if you really opt for a different taxable period. So you might actually opt to like follow a different tax period. So for that, you need to actually pass a board resolution. And in that case, you might have to align with other group company related stuff. For example, if your other companies are following a different type of scenario, or which we call like a different financial period, so you might have to change that as well. So in that case, you just have to go back and check that what exact taxable period you have to follow. Right. So I'll just quickly check if you have any questions related to that. Guys, if you have any question related to the slides which we have already discussed, so please go ahead and ask these questions so that I just quickly, like answer these questions right away instead of just piling those up at the end of the slides. All right, so I think we have a question. So you're, Kishore, you asked that is there a basis tax period for corporate tax? Uh, Base tax period or basis tax period. So if you're referring to the tax period for the corporate tax, you need to actually consider your company's financial period. That is number one. If you want to actually opt for a different tax period, you have to pass a board resolution, and you need to have the solid excuse for opting for a different tax period. So yes, it is. They have given you a flexibility. So it's not like other jurisdictions where they have like very specific tax period that every company has to file or follow the same tax period. It is not going to be like that. So they have given you the flexibility to opt for your own tax period. Okay, so there is another question applied. So this applied on company income or individual income or both, sir. Okay. Rizwan has asked one question that this applies to the company income or individual income. So this is called corporate tax, and it's a corporate income tax. So it is only applied to the corporation's income or entity's income, not on the individual income. There is no independent individual taxes or individual income taxes in UAE. Uh, Ijaz has asked about tax group. I think we have a separate slide for the tax groups, but just to give you a brief answer on that, yes, you can actually combine multiple companies or more than one company under one tax group. There are multiple, a couple of things which has to be first considered before like combining all of your companies in a tax group. But the tax group can only be formed when you have a parent company, parent and subsidiary relationship, and that relationship has to be for more than 95% of the shareholding in that group. Then yes, then you can consider of developing that as a tax group. If that is not the case, then you cannot actually create a tax group. But again, you have to file the separate returns for all the companies. In line with the corporate tax, our individual salaries are also subject to tax. No, they are not subject to none of the personal or private income, including salaries, including your dividend, including bonus or a commission or any other type of income you're generating is subject to tax. That is not completely not subject to tax. Uh, any percentage for salary for working partner, SME are doing to getting salaries. So if you're referring to the salaries for the partners or managing directors or the owners, yes, you can actually, that is adjustable and that is allowable expense in your corporation income in your income statement. Yes, you can actually allocate that, and that is adjustable income expense. But it cannot be like the people currently trying to do is they are sort of putting a high level of income, salaries to the income statement and charging the tax, charging the expenses, or increasing the expenses. So it should not be the case. It has to be justified. It has to be the arm's length transaction. So in that case, yes, it can be the adjustable expense. But if you are not charging the if you are charging irregular type of a salary, so for example, I've seen couple of cases where people are charging like 100,000 dirhams in every month. So we ask for the justification that do you really consider yourself charging 100,000 dirhams salary? So in that case, there has to be a justification or a standard. Bilal asked, what about the director loan? Uh, it depends. So, for example, a director loan, if director has given a loan to the company, that is a balance sheet item. It has nothing to do with the with the income statement. But for any loans which are directly having any interest payments or interest expenses, so yes, those interest expenses, which is of course business expense, so those are adjustable. Yes, but there is a certain criteria which we have to meet. All right, perfect. So I think I've answered enough questions. I'll jump to the next slide. Right. So the corporate tax law for the free zone entities. the most talked about type of a question. Are free zone companies exempt from the tax? Ijaz, you want to ask any question? Please write the question in the chat box. I'll be able to answer that. Same honor of free zone company and mainland company can group these two in corporation tax. Yes, it can be grouped as in under the corporation tax group, but there has to be a parent and subsidiary relationship. So one company should own multiple companies, then only you can create a tax group. Otherwise, you cannot create a tax group. All right. So does this apply to the free zone companies? Yes, it applies. There is no such exemption. If you fall under the specific criteria which has been set by the Federal Tax Authority, I have a brief about it, and I'll try to take you through that very quickly. So, for example, what are the slabs? Are there any different slabs for the free zone companies or for the mainland companies? No, there are no different slabs. If this applies to you, then yes, it is going to be either 0% or 9%, or there's another slab, which is if it is a multinational company or that kind of a company, then there's going to be a third type of slab, which is very high, I think. Anyways, so you have to make sure that you need to consider if your free zone company falls under that criteria, which has to pay 9%. Now, the question arises. There are two important parts. The first part is to see the law actually states if a company or entity which is under a qualifying free zone, and that company is performing a qualifying free zone activity, then yes, it can actually get the exemption from corporate tax, but only for that particular activity, not for all other activities. So, for example, how it actually works. If you see this criteria, which is there on your slides, on your screens, just look into this criteria. You have to meet all of these to have the exemption from corporate tax. If you do not meet from one of these, then you cannot be entitled from the exemption of corporate tax from being into a free zone or being into a qualifying free zone and performing the qualifying free zone activity. So the first criteria meets adequate substance in UAE. That means it should not be just a shell company or a paper company that it is just there or it's just a license, but you need to have the adequate substance. When I say adequate substance, you need to have your operations here. Your directors should be based here. Your directors should be meeting regularly, having the board meetings here, having the other stuff being operated from the UAE. That means you have the adequate substance, not just one single license. If you do not have the adequate substance, you cannot consider yourself as qualifying free zone person. The second thing is the drives qualifying income. So I have the list of those incomes in the next slide, and I'll take you through those very quickly so that you can understand what kind of qualifying free zone activities could be there, so that you can actually claim that kind of that corporate tax exemption. So in that case, you need to be performing one of those qualifying activities or one of those qualifying incomes you should be generating to qualify as a qualifying free zone person. The third thing is that you should not be elected personally, that you have not elected yourself kind of exempt from the 9% corporate tax. So in certain cases, you might actually consider to elect yourself for not getting the exemption from the 9%. And what could be those scenarios? It's a very detailed debate we can have maybe some other day. I'll try to arrange some transfer pricing webinars. In that case, we can discuss those things over there. Now, not just the transfer pricing, international taxation and all that kind of stuff. So anyways, complying with the arm's length and transfer pricing rules. So in that case, you have to comply with these rules. Non-qualifying revenue is less than a specific limit. Shall discuss in detail. Of course, we have a separate article on this, and we can discuss that separately. And yes, every single free zone company has to prepare the audited financial statements from now. If you do not prepare audited financials, you should not consider yourself a qualifying free zone entity. Of course, it's by law, it is required. So now every single free zone company has to prepare the audited financials, whether their free zone authority asks for it as part of the renewal process, or it's just the individual company which has to be, follow the rules. So they have to maintain the audited financial statements. I'll quickly check the chat if there is anything. Okay. All right. So perfect. Okay. So what's there? The business activities for free zone taxability. If you're if you are a taxable company technically residing in a free zone, then what actually applies there? So there are three distinct categories. The first one is the qualifying activities. The second is excluded, and the third one is also there, which is other activities. So, for example, I've already mentioned. If you see that the first criteria which we saw was the second one, which says drives qualifying income. So, for example, if your income is considered to be as qualified income, you're performing or your company is performing. So what could be those qualifying incomes? Let me just take you straight to that list. So these are the qualifying activities. If your company residing in UAE and uh, and residing, of course, and registered or permanently established in a qualifying free zone and performing these qualifying free zone activities or qualifying activities, so then you will be able to consider yourself to the or subject to the exemption. The first one is manufacturing of goods or materials. So if you consider that your entity or organization is into manufacturing of goods or materials, yes, this activity is considered to be as the qualifying free zone activity. This is number one, and very important one, especially if you go to Jawal Ali, you go to any other free zone, which is in, like kind of crowded by the manufacturing companies or activities, which are actually the industrial, having the industrial licenses. So if that free zone is considered to be the qualifying free zone, they have a license from there and they are performing this manufacturing activity of goods or material. So they can consider themselves for this particular activity. I'm not talking about if they are into other activities under the same license. So in that case, they might not be able to claim that. So this is number one. Number two is the processing of goods or materials. This is very important actually. There might be some of the companies. So, for example, if you manufacture pipes or PVC pipes or anything like that, so in that case, you are actually producing the pipes through a material, and you are trying to produce a finished product, and then you actually supply directly to your clients. So in that case, yes, it's a manufacturing activity. But in some cases, there are companies they only process the goods or materials. So people bring the material to them, they process it, and they actually take the finished product out of it. And that is the processing activity. In that case, if that is the case, they can also claim to be as the qualifying free zone activity. The third one is the holding of shares and other securities. If your company is registered as a free zone company in a qualifying free zone, and they are only there to hold the shares. If you go back and you see that there are a lot of companies in UAE, especially in the free zones, they are called as a holding company. Now, holding company scenario is something where a company is holding multiple companies' shareholders. They are only there to just to hold the securities or the shares in multiple companies. So in that case, yes, it becomes the qualifying free zone activity. Qualifying activity performed by a qualifying free zone person in a qualifying free zone, of course. Now, the other one is the ownership, management, and operations of ships. If you see, there are a lot of shipping companies which are directly operated through the free zone companies. Now, in that case, if your company owns different ships, they manage the fleet and they operate the ships for logistics purposes or anything, like they give those ships on the rental basis or anything like that. If that is the case, then it becomes also a qualifying activity. Then we have the reinsurance services. Now, the reinsurance services are also considered to be one of those where they can actually be entitled to the exemption from the corporate tax. Fund management services. Again, if you have any fund registered within the UAE and they are managing the funds in a source as a source of generating income for the people who have invested into that fund, or they are the ones who are who consider themselves as a fund manager. So that fund management service or activity can become a qualifying activity or qualifying income being performed in the qualifying free zone. We have another one which is wealth and investment management services. Again, kind of a same activity. It normally comes under the financial services licenses, just like if you go back to the DIFC Dubai International Financial Center. So we have multiple licenses they issue for the fund management, wealth management, or those kind of licenses where people actually get the license to manage a fund, manage the wealth of different people or different companies, and they in return they get their commissions, and then the investors get their returns uh, getting the uh, by getting the benefits from from those funds. Now we have another important activity which is called the headquarter services to related parties. So if your company is existing in UAE and that is existing in a free zone, in a qualifying free zone, and that is only there considered as a headquarter, and then you have multiple companies outside the UAE, and your company is just there performing a headquarter activity that you are kind of monitoring them, or you are providing some back office services, or you're making strategies here, and you are considering your company or this company particular entity as a center of all other activities and operating activities around the world, then it becomes a headquarter activity. By the way, this headquarter activity is also considered to be the ESR activity, which is economic substance reporting. So if you people, uh, uh, like you guys have any company or you're working for such company, so you have to consider the economic substance reporting as well for this kind of activity. Then we have the trading and financing services to related parties. Now, if your company is providing financial services or support, or they are trying to generate loans, or they are giving loans, or they are giving some sort of financial or trading services to other related parties under this license in a free zone, in a qualifying free zone, of course, then it also becomes the what do we call the qualifying activity in a qualifying free zone. Financing and leasing of aircrafts, including engines and rotable components. So all these kind of components, if you are into that and you lease them, you finance them for the for aircrafts, then yes, it also becomes the qualifying income. Now, the distribution of goods and materials in or from a designated zone to a customer that resells such goods or materials or parts thereof, or processes or alter such goods or materials or parts thereof for the purposes of sale or resale, the activity of distribution of goods or materials must be undertaken in or from a designated zone, and the goods or materials entering the state must be imported through the designated zone. So if the goods or material have been produced, or those have been distributed from the designated zone, then that actually becomes the import concept. If those have been resold to a customer in mainland, so it has to be considered as import. Then the other part is basically logistic services. If you are into logistic services, then it also can become a qualifying income in a qualifying free zone. Now, any other activities which are considered to be the ancillary services related to all or any of the above activities, so that can also be considered as some sort of exempt or subject to the exemption from the corporate tax. Anyone has any question related to these things, so please just like write your question in the chat box, and I'll quickly just try to answer those questions. And otherwise I'll just move to the next slide. Okay, so we had a question actually that what about the offshore companies? Offshore companies are, first thing we I think we need to understand the whole concept of offshore companies. Offshore companies are not there to do the commercial activities. They are there. They might be there to hold the assets. They might be there to support any other company, or to hold any other shares of or the shares of a company, or assets, properties, and all that. So in that case, that does not actually that might not qualify as a commercial activity. But specifically, if you have seen the offshore companies, their legal structures are completely different from the limited liability or other types of companies. So I don't think so that there might be some impact on that, but I'll definitely get back to you on this. You can just drop me your email address or a phone number. I'll try to answer that also separately. What about the hospitality companies? Yes, any company, whether it is a hospitality company or like a hospital, or even in some cases, of course, they are private businesses. They are generating income from this country. So if they are generating income from this country, they have to pay the corporate taxes, unless and otherwise, if they are doing or performing any qualifying activity from the qualifying free zone, then yes, they can claim to be exempted. Distribution of goods like import from free zone and selling in mainland or to other GCC countries, are these qualifying are under zero rate corporate tax. First thing, there is when we say zero rate, we should not use this word as zero rate, because it might actually confuse people with the VAT related zero rate supplies. Uh, so basically, you're saying that if the distribution of goods, when you say distribution of goods, yes, their distribution of goods type of activity can be exempt. So, for example, like import from the free zone, if it is imported from the designated free zone, like Jabza or maybe Safe Zone or Hamria or these kind of designated zones, and then selling in mainland or to other GCC countries, are these qualify as under zero rate corporate tax? If those are considered and done in a qualifying free zone, then it becomes a qualifying free zone activity. Yes. If it is done by a company, I'm talking about a designated zone company, the person or a company who is actually buying these products from a designated zone company, then for them, and then they are reselling it, then it becomes it is not a qualifying activity for that company. Any other question you have? Okay, we might have another question here. No, that's only a hi. Okay. All right, so I'll just jump the next slide. Okay, so what kind of activities are excluded activities for free zone entities? As per the UAE Corporate Tax law, the following are the excluded activities. If you go through these activities, these activities are completely excluded. When I say excluded, so of course those are completely excluded. So if you go through, you will see that these are mainly the same activities which we discussed previously. Anything which is related to the ownership or management of the ships, anything which is related to the fund management services or wealth management services or banking activities or insurance activities. And then we have the finance and leasing activities. Then we have the ownership or exploitation of the immovable property, except now when there is an exception, that means the commercial property located in a free zone where the transaction in respect of such commercial property is conducted with other free zone persons, then yes, it can be it. This one is the only exception, but other than that, ownership or exploitation of the immovable property, that can be the excluded activity. Then we have the ownership of or exploitation of the intellectual property assets. That is one of them. Intellectual properties can be uh, uh, the those kind of activities where those companies actually own and they hold these kind of intellectual properties, so they can also claim to be these can be the excluded activities. Now, qualifying income for free zones. The qualifying income is categorized based on the nature of these kind of transactions and parties involved. Number one, transactions with other free zone persons, transactions with non-free zone persons, income from all other transactions. So you just have to categorize these three. So first thing is transactions with other free zone persons. That means like transactions being done within the free zone, the same free zone, or with other free zone, with other free zone persons, maybe other free zones out, which is not directly related to your free zone, but maybe there are multiple free zones. So transactions with non-free zone persons, which could be the mainland companies generally. Then we have the income from all other transactions. So now we have another one, which is, of course, domestic or a foreign permanent establishment. It's again a very important question for multiple companies. I think I've tried to briefly, like give you some idea about the free zone companies. Do you guys have has any question related to the free zone? Please ask me now. No, either I've done a very good, really good. I've done a good job where I've tried to answer. Maybe I've already answered all of your questions, or we don't have any question. Sorry. Ah, finally, we have a question. Kishore has asked that do the directors have to be residing in the UAE? No, it does not actually mean that your directors has to be permanently residing in UAE, but there has to be a connection. When I say like connection, so you have to see that if your company actually existing in UAE has a substance or they are doing some substantial activities from UAE, they're not just like merely raising the voices for anything outside the UAE, or they're not even receiving money, or they're not paying money to their suppliers. They do not have suppliers here, or they do not have clients here, or they do not have direct relationship from with UAE. So that actually has to be there to consider your company as a permanent establishment within the UAE. There might be a lot of people who might be considering these kind of things. In that case, that they might have some companies outside the UAE, maybe in Singapore, maybe in Malaysia, maybe other part of the world, and they might be considering that okay, we can have a company here, and we can consider that as a permanent establishment, and then we can combine and consolidate all the income. So in that case, you have to see that if there is any double tax treaty between UAE or the other countries, and if there is any double tax treaty, so you have to go through that, and you have to see that if the terms have been are applicable to in your case or not. So if that is the case, then and you are paying taxes here in UAE, and there is a uh, high probability that you will not actually pay any taxes, or maybe a portion of taxes you might actually pay outside the UAE against the commercial activities you are performing in those countries. Now, can a UK limited company registered in the UAE for tax purposes? Wow, that's I think a UK limited company registered in the UAE for tax purposes. You're actually trying to just confirm me that you're trying to ask me if a company in UK residing in UK can be registered in UAE. Again, the tax criteria does not work like that. Having a company does not mean that you can be subject to taxes within the UAE or any other country of part of the world. So you have to consider yourself as first thing, if you have a company in UAE, so you have to see that if that can be considered as a permanent establishment in UAE. So you have to have a fixed place criteria which you have to follow. That is number one. If you do not have a fixed place, just merely a license or a piece of paper, that actually does not work like that. No UK registered company, but trade in the UAE. Okay. Um, if the company is registered in UK, but they are trading in UAE, so that actually makes it a non-resident company, right? So in that case, you have to again see that if first thing, of course, you do not have a legal structure in UAE, so you will not be able to have a permanent establishment in UAE. So you might be doing the trading, and there are a lot of people who actually trade as a non-resident. There are companies, international, multinational companies, they are registered as a non-resident in UAE or different part of the world, but they have to comply with the local rules, certain rules. But in your case, I need to actually, I can't answer like this. It has to be considered with other details. So, for example, if you are doing the trading, how you are doing the trading, if those products are being manufactured in UAE and then resupplied or resold within the UAE, then it becomes a different type of company. If those have been exported to UAE, then it becomes a different type of concept. So that has to be discussed in detail. Whether any capital allowance deductions from net profits or purchase of new assets. Oh my God. Okay. Daniel has asked a very important question actually. So if there is any capital allowance deductions from the net profits on purchase of new assets, again, when you actually say that what kind of expenses can be deductible, we're going to have a separate, by the way, a webinar maybe during the next month to discuss about the allowable expenses and non-allowable expenses, or deductible or non-deductible expenses in terms of calculating the corporate tax liability. Now, when you say like capital allowance deductions, there are certain rules. Those have been actually set by the FTA, which needs to be considered. And yes, if there are capital expenses, so those can be adjusted. Yes, in some certain cases. But the losses, or what is the criteria or a treatment of a loss, if you have to adjust that loss to your net profits, then we have to see that. But when you are specifically, because you have specifically asked about the capital allowance deductions. Now, if these things are specifically, comes under the set criteria of FTA, then there are some allowances. But generally, when you say like you have the assets, so technically you are already adjusting those assets or the value of those assets through maybe the by deducting or adjusting the depreciation, which is a liable tax expense. If you have any other specific question, Daniel, so please ask me. Please go ahead. Abraham has asked, please, what is the minimum capital requirement for a free zone company in UAE? Abraham, there are different types of authorities. There are certain types of licenses, and there are certain type of free zones. They have specific criteria for this. It cannot be answered like this. There is no general or standard criteria. So, for example, if you go for DMCC, in certain cases, they might actually ask you to actually have the a minimum capital in the bank account and then share the deposit certificate with them. So it becomes mainly mandatory for those companies. If you go for like DAFC licenses, there are multiple licenses. They ask for having like a specific minimum share capital, which is like $500,000 or $100,000 or something like that. But generally, in the limited liability companies, or mainly mainly from the trading concept or mainland companies, generally there is no such minimum capital requirement to be shown as in or to be deposited in your bank account or anything like that. Usman, absolutely, we can discuss that separately. I'll share my contact details if somebody needs any sort of help. So we can actually do that. We can discuss with you guys. If you have any question, we can answer you. All right. So, Zaryab has a question. I think there were a few questions above which I missed. I'll just go back and see if I can answer. Zaryab, the criteria of tax calculation is not on cash basis; it is on accrual basis. So please make sure that you are calculating, because your income statement, your balance sheet, whatever you are trying to like sort of design, everything is directly. It's not always on cash basis; it's always on accrual basis. So it has to be like that. All right. Perfect. Yes, I will do that. Da, 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 da. Okay, so Kasala, you have asked, any foreign companies operating in UAE, are they subject to double taxation? Again, a difficult question. A detailed discussion has to be there. When I say any foreign companies operating in UAE, are they subject to double tax? It cannot be subject to double tax if there are double tax treaties between UAE government and in that particular the other state. So if there is any double tax treaty being signed and they have certain set rules, if you fall under that or your company fall under that, so it should not be subject to the double tax. But if there is no double tax treaty, then you have to actually see if what actually the local rules allow you to have maybe a tax credit for those transactions which you have done with between those two states where there is no double tax treaty. So there could be some tax reliefs in that cases, but for that you need to make sure that you get the tax certificate, which is for paying those taxes in a different state and then claiming the credits in the other state. But it has to be again discussed that how it can be done, because different states or different countries have different criteria around that. Perfect. All right. So, right, let's jump back to into the permanent establishment rule. I'll quickly just go through this. There are a couple of more slides. After that, I'll just close down the webinar. I'll share you the with you guys the next date of the webinar, which is going to be about the adjustable or deductible expenses. What kind of the deductible expenses we have to see? What is the criteria about the taxes to be carried forward? What is the criteria for any other specific like expenses to be adjusted, how we can actually calculate, and especially for the accounting people like us. So we have to what kind of criteria or structure we need to follow to help our organizations to calculating the corporate tax liability in the rightful way, because there are going to be a lot of different things which you need to consider. So I always give this kind of example. So for example, entertainment expenses, yes, for the management reporting, it is 100% adjustable and allowable expense, but for the corporate tax liability, it can only be adjusted up to 50%. So that means when you're calculating your corporate tax liability, there has to be a criteria. You might actually have to reconsider changing your chart of accounts in your accounting software, you might have to reconsider of recalculating your corporate tax liability outside the accounting system, but it has to be bridged with the existing accounting system, so that if somebody comes back from the authority side and they ask you any questions, so you have to answer that. And in that case, maybe after 2 years, you might actually forget, or you might not have that kind of a calculation. So you need to have those kind of bridges, so that if somebody actually asks you that how you have adjusted it, so that that information can be passed on as quickly as possible. Now, so there are two types of permanent establishment. The first one is the domestic permanent establishment. This term refers to a fixed place of business located within the UAE, but outside a free zone, that is mainly the mainland, through which the business of an entity is wholly or partially conducted. If income is generated through this establishment, it will be subjected to a tax rate of 9% definitely, or a 0%. Now, there is a second criteria, which is foreign permanent establishment. This pertains to a fixed businesses operating situated outside the UAE. Income attributed to such a foreign entity will also be subject to or 9%. Now, I have a couple of these slides which are the key takeaways, but I just have to mention, I think there is one slide which is not being added here. There are certain reliefs or business reliefs which have been shared with the, or which have been sort of given to the local business community. If you go back and see that the criteria or the overall structures, how the Federal Tax Authority actually they create the structures, so that the rules or the new rules or business rules or tax rules, those have to be favorable to the local business people. Those have to be favorable to the local business community. There could be a lot of debates around this, that how this will actually impact the local business community. I'm a businessman, I run my own firm, but I personally believe that having these kind of initiatives always helps the economy. It actually aligns you with the international world, the criteria with other economies, and it actually gives you the benefit of treating like yourself or the other countries treating you in a way that considering you as a more regulated environment. Now, what I've seen is that right after the implication or implementation of the corporate tax, Federal Tax Authority came back saying that yes, there are certain reliefs for the people. So, for example, if you are registered as a freelancer, for example, there are multiple people who are registered. They're doing freelancing stuff, like they're mainly associated with the media or teaching or any other professional work, and they are working as a freelancer, or they're registered as a natural person or freelancer. Now, in that case, if their income do not exceed 1 million dirhams in a taxable period, I'm talking about, if their income does not exceed 1 million dirhams, so they are exempted from even registering for corporate tax. So they do not have to register for corporate tax. So on the other hand, if you're LLC, yes, you have to register, but you have to file the return also. But there's a big but. Now, how it actually be considered as a relief if your company does not earn more than 3 million dirhams as revenue. I'm talking about revenue, not income, net income or net profit. I'm talking about specifically about the revenues. If your revenue does not exceed 3 million dirhams in a taxable period, then you can actually consider yourself to subject to a business or tax relief. In that case, you will file the return, but you will not pay any corporate tax liability. So, for example, I'll give you an example so that you can understand this. If your revenue was 2 million dirhams, even in that 2 million dirhams, you earned 500,000 dirhams worth of profit. So that means your 125,000 dirhams profit is subject to 9%, right? Because the first portion of 375,000 is subject to 0%. So the remaining is 125,000, which is subject to 9%. Now, in that case, you have to actually consider that in normal scenario, you have to pay the corporate tax liability of 9% on 125,000. But in this case, you have not exceeded 3 million dirhams revenue. So that means you will not pay any liability. But again, there is a but. If in the second year you exceed 3 million dirhams, then you have to pay the second year's corporate tax liability along with the first year's corporate tax liability, because this relief is only for the consecutive 3 years. This is only for the consecutive 3 years. So if you exceed 3 million dirhams in third year, then also you have to pay the first year liability, second year liability, and third year liability. So that means if you are an accountant, you have to have the corporate tax liability as a liability outstanding in your books of accounts, even for the first year or second year, if there is a corporate tax liability. I hope I've explained you in detail, and I've tried to give you the whole scenarios. If you guys have, we have already exceeded the time. If you have any question, please ask. We have already exceeded. This was only for 1 hour. Sala, thank you so much for the really it's really I really appreciate your words. If you guys have found it really like informative, so please make sure that do join our next sessions, which are going to be announced maybe like in next couple of days. I can give you the topics. The first topic which we are going to discuss is the adjustable expenses and the impact on the accounting structures. That is number one. The second is very important again. That is the transfer pricing. We might have to actually discuss those in a couple of sessions. Then we are going to have a couple of webinars about specifically about the free zone companies and the scenarios which can be built about the transactions between the free zone companies and the mainland companies. So we are going to plan those. So those are going to be there on the IFA website. Please do follow that list and just keep an eye on those webinars. Few other very important announcements. We are going to have our annual gala dinner very soon, which we have every year, and all of the IFA members will be invited in that session, and very important people will be there. So I'll definitely request everyone to please join that. I'm going to actually put the last slide. This is my work phone number, and so you can actually, so for example, if we go back, this you can, it's there, it's fine, but this one is my number. The other one, sorry, the other one is my colleague's number, and this one which I'm highlighting is my number. So you can always approach me on that. And this is my email address. So you can sort of approach me here. I will put this in the chat box also. And I'm waiting. I'll give you like few more minutes to everyone. If you guys have any questions, so please feel free to ask me. I'm still here. And you guys want to discuss any specific questions, so we're going to have a very informative session again tomorrow. It's going to be a networking session in our office. You guys are most welcome to join us. Our office is on the Sheikh Zayed Road, which is next to Financial Center metro station. So you can, it's very easy to reach us there. And we're going to have a lot of very qualified fellow accountants, fellow IFA members, and we'll be like having a very good session tomorrow. I look forward to welcoming you guys in that session. Right. So thank you for the informative session. Thank you so much. And could you please share the recording? Yes, definitely. I'll definitely discuss with the IFA team back in UK, and they might actually send this link. Meanwhile, there's very important thing. I will try to like share a link. We are doing a series of podcast, so you guys can always follow us on that podcast series, which is specifically related to corporate tax, by the way. So that's also very interesting. So you can sort of let me just get the link. This is the one. Right. Yes. Right. So I'm not a tech guy, honestly. I can talk about numbers, I can talk about so many different things, but when it comes to the technology, I am really bad at it. Okay, I can't even see the link of my own. Okay, it's there, I think. Yeah. Okay. Anyways, so what you can do is basically, I think uh, you can try to find this on this link. If this works, I'm not sure, but please do check that. And we are doing this corporate tax series of podcasts where we are trying to answer a lot of questions, and it actually helps us to understand different scenarios. And then we do some research and we come back to everyone who actually come to us. Government entity also register for corporate tax. Mohammed has asked that the government entities do not have to register because they are completely exempt from the corporate tax. They might not even have to register. They're exempt technically. All right. So one of my colleagues has just shared the link. Wonderful. Thank you. So great. So this is the link. Absolutely, Rizwan. We try to share the upcoming links. Those are technically announced by IFA, and specifically for IFA members, they get the emails directly. Uh, Rizwan, we'll try to share that definitely in the group, also in our WhatsApp group. You already have my number. If somebody wants to be part of the WhatsApp group of IFA, please do drop me a text, and I'll be more than happy to add you guys over there. Thank you so much, guys. If you do not have any question for me, so I think I'll just close this session. And thank you so much, everyone, for joining this session. It was really wonderful to see these many people actually attending this session. And if you guys have any question, just just pick up the phone and give me a call. Thank you so much. Take care. Have a nice weekend. Enjoy.